how's it going, guys? Welcome back to the Capital Mindset Show. Today, we're going to be discussing an update on Overstock. So this one's long-term due. A bunch of you asked me in older videos, and we were waiting and waiting and waiting. And here we are. We're finally at the Overstock update. Okay, so basically what I'm going to be covering today is the different prospects as far as the different platforms go within Overstock's portfolio, as well as what role it plays in my portfolio, and some other key aspects to think about when I position this in the portfolio. Okay, so with that being said, we're going to go over the price action first, as always, to kind of get the outlay of everything as far as is it up, is it down, what's going on, why is it down, etc. So for the most part, I think Overstock was highly connected for its crypto assets. And I know because that's like a buzzword, or it has been a buzzword for quite some time now. Now it's probably going to be met with skepticism. So the sentiment's actually in the whole totally different direction. Now, looking at Overstock here in the long-term picture, it's kind of up and down and kind of overall up, right? But very volatile. And actually was priced for bankruptcy right before this massive, just disgusting run up, okay, in a very short amount of time. But we don't look at the past. Let's look at what's going to probably happen going forward. Well, actually, before we do that, we have to look at the recent past, okay? So in conjunction with everything else, there was the liquidity crunch that I was talking about back in November, December, and then here we are, okay? Has it bottomed? I don't really know if it has or hasn't bottomed. I don't know if the liquidity crunch is really over, or as I'm calling it, basically what other people might call it is tightening of money, right? The tightening of money is causing risk assets or speculative assets, the most speculative assets, to come down a bit, right? What we're looking at here is Overstock at about $2 billion. And we'll talk about the PE ratio, or the GAAP net income earnings versus the cash flows, but we'll get to that. But over this time period, actually, Overstock's performed rather poorly, about 50% down in 1 year. So that's terrible performance, especially over a longer period of time, such as 1 year. And we take a look at the 5-year, it should be probably up. Yes, it's up about 177%, but with extreme volatility. So you actually need to factor in that volatility. Okay. So what's going on from here? Well, let's take a look at, for example, some of their key drivers going forward as far as the core business goes. And then we'll talk about the ancillary investments that they have that kind of are just added potentials, right? And that's the key word here, potentials on this business. Okay. So PowerPoint, this is their investor presentation. They're kind of highlighting it for us, but I'm going to be adding in some new tidbits here and there. But basically, as the population grows, as the average American goes out, moves out, owns a home, rents a home, they need what? They need furniture, right? They need furnishings. Okay. So home sales is actually highly keyed towards this macroeconomic backdrop that they rely on in order to grow. Okay. But that doesn't go further, or that doesn't go as far as it should be, right? Really, what should happen is consumer spending. So consumer spending growth is actually more important, or goes in conjunction with home sales growth, okay? Because not only that, you also need to consider or factor in the rental market, because renters also need furniture. People don't just live in empty homes. And this is the most important one for them currently, because it hasn't matured yet. It's online purchasing. Okay, so online. So right now in 2020 was 1/3. We'll see when the data comes out for 2021, but I presume it's going to continue to grow. And there's a lot of opportunity for all of these businesses, including Wayfair, Amazon, Walmart, everyone, to switch more to an online-based model to sell furniture, right? And actually, let's take a look at the larger players. Because they actually show that to us, and they admit they are not the largest player. So here we have Amazon at number 1, number 2 being Wayfair, okay, then number 3 being Walmart, and number 4 being Overstock. I would compare Overstock more to Wayfair than I would Overstock to something like Amazon or Walmart. Okay, it is nowhere near what those scale of those businesses offer. It's more along the lines of a smaller version of Wayfair, and they're trying to target a different audience. And I'll actually point to this slide because it actually does a good job at visualizing what it is I'm talking about. Well, they want to target the value, right? And the home goods expertise. So that this quadrant right over here, you can kind of see it here. So basically they consider their competitor to be IKEA. That's who they consider their competitor to be. Okay. They don't consider Wayfair to be their competitor. You may disagree with them, but that's what they're trying to tell you. They're saying, hey, we want to take over or compete with IKEA. We want to be the online version of IKEA. And then we want Wayfair to be over here fighting with all these guys. Okay. So we have the, I guess these are the, yeah, Restoration Hardware. That's the expensive one. But Wayfair is kind of around here, Bed Bath & Beyond. So they want to be, again, on the more value side. And then we have Amazon and Walmart down here. I'm not sure if that's necessarily true. Amazon has some okay looking furniture too. You can find some really good furniture on both Walmart and Amazon, to be honest. And Target, I mean, I guess, I don't know. I mean, the people who love Target. Okay. So I guess so, yeah. So the thing what they see as an advantage of targeting those consumers is their the loyalty, right? Because if you get those bargain shoppers are more likely to return to you. And think of IKEA, like, people who love IKEA. I know people who love IKEA. It's a furniture store, but people love it, right? There's all these I mean, IKEA's done a great job with their branding, don't get me wrong, because, for example, there's a lot of people out there who would say, oh, I wish I could do a hide and go seek or inside of an IKEA, or do a sleepover in IKEA. I'm like, what? And then there's a meme I saw where there was a storm, it knocked out everything, and the people had to stay in IKEA and have a sleepover in IKEA. And they're like, oh, dream come true. So that's the kind of like the idea that on online presence on social media, IKEA has that kind of following. And Overstock's probably like, those people are loyal. Those people probably only will shop from IKEA. We want to tap into that market, right? But I have a very good friend of mine who, every time he buys furniture, I don't know if you're watching this, by the way, you know who you are. They just buy it off of Wayfair, and they always buy Wayfair. And I see a new piece of furniture in their home, and they're like, oh, I'm like, where did that come from? It's like, oh, I bought it on Wayfair, So I don't know, maybe Wayfair is also doing that. But from what I'm trying to highlight here, as far as we've seen so far, is the underlying business. They're trying to pivot it in such a way that they're targeting this specific type of customer. Will that be successful? Maybe, maybe not. And then that's where the core business, I guess, ends. And we'll revisit this when we get to the model. Right now, I'm going to begin the discussion on their speculative parts of their business regarding crypto or blockchain. Okay, so we'll begin that right now. Okay, so where we begin is actually, let's actually go to the presentation and showcase a little bit about them, but then I'm going to go and talk a little bit more in detail. Okay, so first, let's see TZero and Bit. Okay, so basically TZero, I'm going to leave that for the discussion alone on TZero later in this video. Let's talk about Bit, because Bit's a little bit easier to explain, and then we'll go to the Bit website and then talk a little bit about the implications of such a thing. So Bit's basically a company, again, owned by Medici Ventures, right? So Medici Ventures is owned by Overstock, just so everyone understands that. So again, Overstock, by buying Overstock, you do have ownership exposure to these businesses. But Bit is a central bank digital currency provider. Okay, so these are the two big ones again. But what they currently do now is for the Central Bank of Nigeria. So everything you would ever fear about a central bank digital currency, they'll make it happen, right? So they actually already launched. They even say here that they've already launched. It's actually up and running. So we can kind of look or pay attention to Nigeria's success. And if this or that shows a lot of success, other countries might follow, and then Bit would stand to grow and profit from that as well. So if you go to, for example, Bit right here, their website, Harness the Power of Digital Currencies. Again, they are positioning themselves in such a way that should the world decide to move to digitized currencies of their own currency today, like the crypto dollar, et cetera, crypto euro, this business wants to do that, right? They want to help countries make that transition, right? And countries might want to do that, right? It gives them a lot of power, a lot of capabilities in order to try to, change policies, et cetera, stuff like that. Okay. Now let's move on to TZero. So TZero is a little bit more exciting for a variety of reasons. And that has everything to do with digital securities, right? So for those of you who may not know, you can buy stocks, right? You can buy stocks, right? So the way that works is through a more complicated system, currently, right? You want to buy Apple, you go on your broker, and your broker does it for you. You don't really pay attention to what's going on in the back end, but there's a lot of things that go into it, right? Well, TZero is trying to be a new form of broker using blockchain technology. Okay, so basically, and let's get rid of the buzzwords and let's actually talk about what that means. Well, that means that, for example, you can buy this stock, right, Overstock, and you can own shares in Overstock, but through a blockchain format, right? And it's supposed to be simplifying the process, a lot less middlemen, and there's a whole bunch of added benefits, but it's still in early stages. So I wouldn't say that it's anything like it will look perhaps in the coming decade. But it is very interesting that if such a thing were to be successful, this would have massive ramifications for the industry at large because of this reason. And I'll actually get to it right here in this section. So liquidity for private companies. So let's say I have a business and I'm not very large, but I would like to bring on investors. And then you are not an accredited investor. And by the way, for those of you who are non-American, there may be different laws or different classifications, but in the United States, we have such a thing called an accredited investor, which is an individual who has a net worth, I think, over $1 million, not including their home, or has the licensing required, which I think a Series 65, for example, satisfies that. But to be an accredited investor, then you can invest, for example, in like private equity deals, et cetera, stuff like that. Well, TZero, should this work as intended, it would allow the smaller business owner to say, hey, I want to raise some capital. I'm going to IPO per se, without the added costs of actually IPOing and taking, or getting charged by the investment bankers a massive fee. You just bypass them, and then you go on something like TZero. They'll probably take a commission. I imagine that's how it works. I'm not going to contact them to ask, but I'm very certain that that's how it would work. They would take some sort of fee. So they're basically the investment banker themselves, but probably a lot less. And then it can allow me to be public, essentially. Anyone can buy my shares. Okay. And then again, it utilizes the same exact technology or the same exact format that someone would buy the stock or these stocks through them, right? And these are the stocks that are currently available. You can buy their own stock, TZero stock. You can buy Overstock, right? You can buy Cruisio, Exode, and this is like some technology company. Let me see. It's like Aspen Digital. Okay. And that's right now currently what's available. So it's still very early stages. This could very much fail, but the idea, the concept is very intriguing. Especially this part. And then this is the applications of blockchain, right? Because you hear that word used a lot, the buzzword, blockchain, 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 right? So we know, for example, I've discussed that, for example, the big four accounting firms, consulting firms, they're going to be utilizing blockchain technology or NFTs, so to speak, in auditing practice. So they're going to be able to keep track of more things a little bit easier. And then, for example, we're looking here at TZero, and they're trying to become a brokerage platform of sorts and allow individuals to buy and sell securities and allow owners of businesses to, access markets or access capital not before available, right? And then from what I'm seeing, for what I'm saying, there's going to be a tremendous amount of demand for such a thing, for example, because of the liquidity crunch that I've been describing that is happening, right? Another person may call it, again, tightening of money. Well, when money tightens, it's more difficult to actually get loans. And we know that because we can see, for example, the banks, the big commercial banks, they're not actually loaning out as much. And it's actually pretty fairly difficult for small businesses to actually get loans. And so something like this, again, probably will come in higher demand, and then they can solve that problem. Okay. So it's intriguing. Okay. So now let's actually step over to the even more, not interesting, but more speculative parts of the business. So we begin again by looking at them through the presentation. And here, okay, we begin with Ripio. So Ripio is a Latin American cryptocurrency. So basically, not cryptocurrency. It's not a cryptocurrency itself. It's a brokerage or a trading platform for cryptocurrencies. Okay, I won't really get into that, but they're again, they're still raising capital. Okay, so but they're focused on Latin America, so I won't really go into that more. Medici land governance. Now this one's a little bit interesting. I'm not really going to pull them up on the website or anything because I think I can explain it well enough here. So that basically does exactly what that bullet point does. It's pretty interesting in that aspect. Again, you can go visit their websites and read more. But that one's pretty straightforward. And then VOATs, all right? So VOATs is actually a new voting system, again, utilizing blockchain. So again, it was actually used at the Democratic Party virtual convention. And I assume that they're working strongly with the Democratic Party to not improve, but utilize or implement blockchain voting techniques, okay? So, that's maybe interesting because if it expands into different countries or starts utilizing the United States, I'm thinking about it from the investor perspective. That would actually be quite interesting for Overstock shareholders because again, by owning Overstock, you own Medici Ventures, and then Medici Ventures owns this. Okay, and then we also know that Pelion Ventures, the reason why their name's here is because they run Medici Ventures for Overstock. So they are focused on this. Okay. And then so Overstock and Medici Ventures are basically joint together in, sorry, did I say that right? No, I didn't. Overstock and Pelion Ventures, they are joint owners in Medici Ventures. And then so they did that so that Overstock can focus on the main business, and then Pelion Ventures can focus on, running Medici Ventures and then actually making good acquisitions and then managing the portfolio properly. Okay. So with that being said, that's basically the speculative side of Overstock. And this is why I'm actually invested in it. Okay. Strangely enough, I will show you guys the model and why I think it's for me, it was an interesting speculative play. And that's what it is in my portfolio. By the way, it's a speculative position, meaning the size is small, but not so small that if, it does what I think it could do, I won't even feel it. It's just about the right size. So I'll tell you the percentage, for example, it is sitting at about almost 1%. Okay. And I did add, by the way, all this time that it was coming down, I added in, and I do have an allocation strategy of a slightly above 1%. And then remember, the total part of my portfolio that is dedicated towards speculative positions is a maximum of 10%. And then currently it is sitting at, as of today, 7, almost 8%. Okay. So it's still below my threshold of what I want it to be in terms of allocation for speculation. Okay. So taking a look now at the model, if we go there, let's actually, I already threw it in there, so we want to waste time with it loading. So we have the analysts have it at a buy rating and a price target of 120, okay, implying 143.3% upside. That's all you want to hear, the analysts? Great. All right. So now taking a look at what we're looking at, the prospects, this is just focused on the main business. This is why I think it's an interesting speculation. Now you might be saying, well, look at the model. It's telling you to buy with very modest growth rates and a massive discount rate. Sure. Yes. But I have to be honest with myself. You see, I'm not investing in it for the core business. Therefore, it would be disingenuous of me to myself. Remember, the only person you will ever hurt by being dishonest is yourself in terms of investing, right? I have to be honest with myself and say, okay, why do I want to own Overstock? Is it for the furniture selling side of the business? Not really. Okay. It's if I'm being honest with myself, it's for those ventures that they're involved in that could pan out. And then therefore, because it's something that could pan out, and that's the reason for me investing in it, it must be a speculative position in my portfolio. That's it. No matter how I feel. Okay. That's the rules I must abide by. Okay. That means that, for example, if I didn't want any other speculative positions, I could in theory then, I guess, by my own rules, put 10% or up close to 10% of the portfolio into Overstock, which would make it almost like a decently sized position, which I don't want to do. But it's an interesting speculative position simply because the core business does seem to provide good value or good framework from which we can build upon in terms of determining value. Okay. And we'll take a look again at everything in terms of the key ratios, but let's first look at here. So the assumptions are basically very low growth, and we're still at a buy, even though I'm discounting it at 20%. Okay. Will the growth continue? They've grown about 13% on average in the past couple of years. Let's actually take a look down here at the timestamps. So we can see here that it was actually 2020 and 2021 that brought them out. Can they continue? That's the risk. Again, so you see, I'm more confident that it should remain a speculative position, that it's if they can continue. I think they can. Okay. That doesn't mean that they won't, but I think they can. I just not entirely certain that they will. All right. Altman Z-score of 8.37. So this company is safe, right, in terms of bankruptcy for the near term. And we'll actually take a look at that. They do have more cash than they have debt. And you can see that quickly in the enterprise value. That's kind of like the quick smell test to immediately spot a company with more cash than debt. And then we take a look at the key ratios over here, and we'll actually look at how healthy it is. So definitely an improvement, right? So now in 2020 and 2021, they have a lot of cash on hand that can pay out all their current liabilities. And then we take a look at the solvency ratios. Total debt ratios come down quite drastically. Long-term debt ratio was annihilated in percentage terms. They were at one point with no debt, but then they started raising some debt. And I guess, well, it actually did come down here. Long-term debt to capital, also coming down. So across the board, they made improvements. And then taking a look here at the profitability ratios, this is really good. So the gross profit margins have risen decently. It's in the operating margins that they showed promise, right? We went from negative operating margins to now positive operating margin of 13.13%. All right. So now the net profit margins are about the same, about 12.86%. And then ROA and ROE again subsequently rose as well. Will this continue? I don't know. Okay. So again, I'm invested not really for the main parts of the operation. It's a proxy to these other interesting investments that I think may or may not pan out. Okay. And that's why it must be a speculative position. Okay. But taking a look at the earnings quality, we see that in 2020, the earnings quality started to become really good. The model actually scores it really well here. And then the model scores it really well now. Okay. But beforehand, it was actually quite terrible. And we can see if we go back to the performance in those years, the performance was quite terrible. You see here, it was down 94%. It was priced for bankruptcy. So good job, model. Thank you for kind of mapping that out for me. And then let's take a look at the inventory, the activity ratios, but the cash conversion cycle is pretty good. It's negative. That makes sense because they're dealing with consumers. So they're taking their product and they're selling it. They're getting the cash. So they're moving inventory nicely. It's about the same. I would consider that about the same, but negative is really good. Asset turnover should be getting higher. Instead, it's getting lower. That's fine. It's nothing crazy. Accounts receivable turnover, it's about the same. I won't consider that really an improvement. Nothing else really stands out to me, but this is actually getting better. Inventory turnover. Yeah, that's actually getting better. That's a drastic improvement. Wow, that's a drastic improvement. Well, that's 2020. Everyone started shopping online. Yeah, you can kind of see what happened here. That this is incredible. So this is probably has a lot to do with what started here. All right, this was all this, right? Or somewhat had to do with that. Okay, I won't say it's the entirety of the reason. All right, going back to the summary report. I think if you are looking at this from the core business, it's interesting just alone on the core business. Okay. Now, the key risks to watch out for are, can they maintain current standards? Can they maintain current growth? Can they maintain and retain those consumers to keep coming back? They can, but you have to be honest with yourself about their ability to do so. Okay. Now, take that aside. If you're looking at this from a speculative perspective in terms of the applications of blockchain that they're trying to tackle, right? Then you're kind of looking at something that could have a promising core business with exposure to these other ancillary or supporting businesses that may or may not pan out, right? So that's why I think it's a decent speculation, if any, because typically a speculation is all or nothing, right? So I'd say some of the speculations in my portfolio, for example, Zillow. Zillow is going to be doing real estate online, and that's about it. Okay. It's going to maybe work around those businesses, but it's pretty much going to be focused on that. Okay. And another one, for example, I'm not going to mention that one because that one's it's a micro cap. But for the most part, most speculations you'll find are going to be, or at least when you consider it to be a speculation, are going to be companies that have a singular focus. This one has a focus that many will say it's not a speculation. It's a profitable business, right? That's what a lot of people are going to think. And then these other things are the speculation, but you have to understand from my perspective, I'm investing it for those reasons. So then therefore I must treat it as such, as a speculation, right? I can't treat it as a regular investment. Okay. But that's kind of just my rules. You don't have to use my rules. Okay. But on that note, guys, if you guys have any questions about what we discussed here today on this video and anything about maybe I might be able to answer on some of these different ancillary businesses, but again, all of the information is really out there. I bet you there's tons of interviews with the CEOs or whatever out there, and they probably do a way better job than me. But if you guys have any questions on that, go ahead and leave it down below. I'll try to comment as quickly as possible. Give me around 24 hours in total because work's been pretty crazy. But if you guys have any other kind of requests in terms of stock requests, go ahead and leave them down below. Please remember the rules: no micro caps, no biotechs before their pre-approval of anything. I'm going to try again to do more stock requests because there is a huge list. So also mind that when you do a request, there is a huge list right now. And then in the future, I'm going to have to change the system and how I do it. I'm thinking about different ways to kind of still provide as many people as possible the value. And I am building a library slowly of each and every stock in the stock market at this point. But on that note, guys, I hope you guys have a good one, and I'll see you guys on the next one. Have a good one. Bye.